Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, June 4th, 2024. It's 11:05 Eastern Time. I'm starting the video, and what we'll do in this one is keep it limited to the equity markets, do a brief update there, show you some updates on some of the things I may have highlighted. I know I highlighted previously, maybe a couple new things here, and then an update on the precious metals and miners. I meant to include that in yesterday's video, forgot to put it down on my notes, but I did post an update to one of the subscribers yesterday in one of the comment threads. Always encourage you, if you're actively trading, whatever, come in the site, check those comment threads. Even under that was under the natural gas post yesterday. I'll get to that in 1 second, but. Let's start out here with the markets. This is just a kind of my busy board, a lot of annotations on this chart. But the gist of it is you can see here as I scroll back before I turn off all the lines. This is the S&P 500, of course, SPY. And you have, let me put my circle tool on here. A divergent high right there. Not exactly a circle tool, but close enough. Here it is. Divergent low right there. See, there's your divergence lines. Positive, aka bullish divergence, negative, aka bearish divergence, negative divergence at that high, and this is just simply an extension. It's not a new divergent high; it's just larger. Once those indicators, if they're still making lower highs, which they were, you had negative divergence at that point. We shorted it. We gained that 8% drop in the Nasdaq 100, hit T2, bounced, and we've come full circle, made that marginal new high, which is still very much, and this is SPY, of course, but I was, the QQQ was the proxy for it. More bang for your buck, typically when you trade the Qs. And so that's it. So divergent high, drop, divergent low, rally, divergent high, drop one, divergent high two, drop two. Is going to be bigger in my opinion. And just to recap, if you're, just catching up, big bearish engulfing candlestick. Those are potential topping sticks. I always encourage you to Google search these terms I talk about. One great source, stockcharts.com, has a phenomenal chart school. I recommend that to anybody new into trading. Go through there, and has a lot of candlestick patterns, trend line drawing, all the support, resistance, how technical analysis works. But you'll find that in the candlestick section of their chart school. And that bearish engulfing was pretty powerful because it wiped out, as I mentioned at the time, 1, 2, 3, 4, 5, 6, or close to, I don't know if it got 5 or 6 previous trading sessions. That goes back a week and a half. And so far, we're still below it. So that was a pretty significant sell signal. And if nothing else, like I said at the time, the RR to me is just too good not to take. In other words, you risked losing a couple percent of stopped out, and that still may be the case. We'll see. Versus making high high single digits, maybe double digits if we my near term, just the intermediate term swing targets are hit, 200-day moving averages. But here's what I wanted to update for you. Let me just, before I leave SPY, get to QQQ. Same story there, bearish engulfing candle, divergent high, negative divergence, just like we had negative divergence here, followed by that correction there, followed by a divergent low there, rally with a divergent high. There was that 8% drop. T2 was hit. That's on this board right there. Rallied up, and these are still the next potential swing targets for either that trade if you're still in it, or the new one that I personally took, coming back in after, sticking to my trading plan there. No shorts above 433, stop out above the downtrend line, re-enter on the bearish engulfing candles, and swing it back down to those potential targets there. What I wanted to show you is, I've covered this recently quite a bit, bearish PPO crossover we had on QQQ just late at the end of last week. And you hit that trend line. You're right. We bounced pretty much off this uptrend line right here. You've got I'll show you some trend lines on QQQ in a second, but I wanted to show you SPY. If you recall last week, SPY was a little behind QQQ in making that bearish PPO crossover. Now we have it. So what I have are, and let me show you on a different board here that'll kind of clear this up. So this is board 3. Yeah, there it is. Thought I had a cleaner board. That's the divergence. Let me go back to that board I had there. I haven't updated this lately, so I'm going to put up the PPO histogram. Again, the PPO can be used as a trend indicator to help both signal, even give you a heads up on an impending trend change, signal a trend change once it's likely occurred, and then tell you where the current trend is. And so this is the histogram up here. And you can see back, I've shared this in the past many times. I like to look for the big hills. These are what I call hills. This is a hill. That's a big hill. These are little hills. You get those in when you're in trading range or low volatility. Ignore the little hills because you're going to get whipsawed to death. So if you filter it out and look for these big hills, that are clearly, clear and distinct, and inverted hills too on the downside, you can see the trend changes. I'm just going to, the arrows, hopefully you can see it on your monitor, the purple lines. Again, I haven't updated in a while. So there was a big hill. You had the bearish PPO crossover. That's when the PPO lines cross. That's all the histogram does, is show you when the PPO line crosses a signal line. And again, it's best views in these pretty well-defined what I call mostly unidirectional trends, not choppy, sloppy trading ranges or low volatility periods. That'll help you filter out these whipsaws like that. So there it is, big hill, trend. There, the purple line said get short, trend change, you got that. And again, you use it, I use it in conjunction, and not a standalone. If it was a standalone and was highly effective, I'd just set an automated trade program and that's it. And I'd sail around the world the rest of my life. My machine makes money, but that's not it. So you use it in conjunction with other things such as divergences, overbought, oversold conditions, primarily buy and sell signals. Divergences, these trend indicators, they kind of give you a heads up the trend is going to change. And then it's these support and resistance level breaks, trend line breakouts that will hone in on your entries and exits, especially if you go down to the 60-minute charts. So that's it. So you can see bullish, boom, bearish, trend indicator changes. Oh, there was a bullish one right there. I didn't have the purple line. I should put it right there. Got you that trend. Told you to get out here. You can see just done a phenomenal job, and you can replicate this on yourselves. And look for these big hills. There was a green one right there. Again, I can move that line over because that was after a small hill. I should have had it right there. When this was a big hill, and you can see it gave you that. Then you had the whipsaws, boom, boom, boom. So ignore. Not going to really give you any predictive or useful information when these lines are flat like that. But you can see we had a clear red hill there that formed. And so then you could have been on the lookout. And again, that's when T2 was hit, and that's when we reversed right around there and came, at least me, part of the bounce. I wish I could say I gained it all, but either way, enough that I'm still profitable from that trade down there. And of course, all the ins and outs I've done. But this is it. This is what I wanted to get at. We now have that crossover, pretty decent hill, as big as any of these over here that signaled pretty significant trend changes, especially this one here. And that's it. So you had that PPO crossover is in effect. It's signaling a trend change when they usually come not right at the highs, but usually shortly after. And that's it. Now, if this crosses back over, well, guess what? That'll be a whipsaw. Sometimes you get a little brief whipsaw once you get the cross, 1 or 2 green bars or 1 or 2 red bars, and then it goes back down. So then you can just, again, you're going to use this in conjunction with everything else. Your stop should be placed on, and your price targets should be based on your entry price, your trading plan, and all that. But like I said, this confirms what I saw on those bearish engulfing candles that I've been highlighting. It confirms, despite the market being just in spitting distance of new highs, it confirms to me one of the reasons to be short as a swing trader right now. And therefore, when you make that case, I have the mindset, and just like when I'm bullish, I want to buy pullbacks to support or breakouts above resistance. When I'm bearish, I want to buy short rallies into resistance or breakdowns below support. And that's that. So there it is. That's SPY. That's your update there. Again, QQQ. I already showed you that. We already had the crossover on QQQ, and that's in play too. Also, again, most importantly, after a big green hill. And there was a big green hill and didn't mean much. That was a little whipsaw. And then we were in that low volatility grind right there in an uptrend, and without any, sell signals at that point. You were up above this uptrend line there. Okay, dropping all the way down to the 15-minute time frame. I just wanted to give you an update there because I added a new trend line today. I always say the charts are dynamic, therefore so is my analysis, meaning charts are changing every day. and you're going to see new levels. So now we have quite a few reactions here on the downtrend line. This was the one I had previously, and I'm going to 86 that downtrend line. Why am I taking it off? Because we've already been violated several times there, and that takes away from the validity of that trend line. So this is a new potential trend line here. If this is a 15-minute chart, if we can punch up a little higher and not too much higher, equal or slightly higher high there, you might get some negative divergence there. And so, and I don't have a lot of reactions on this trend line, so it's not like super strong, but it's the one to watch right now. And there's also an uptrend line right here. Let me add that. I can see that you have, so pretty much a little triangle pinching here. And also I'm going to add this line here because I can see there was a shelf of support right here. Why is that support? I should have had that line on there before. Well, it was a reaction high there. You had a breakout, you back tested it successfully, bounced again, then you gave it up, and it was impulsive once you broke it. It's been whippy, but I see enough reactions, especially here. Most of you can see that support shelf. It was resistance down below, trading range, support above. Again, once it broke, it was impulsive. So that's pretty much a level that I can just say I don't want to see violated. It won't take out, won't undo those bearish engulfing candles, but there's a good chance that it'll be the catalyst to do so. Either way, we'll watch it and I'll give you updates. And again, I mentioned I'll be leaving town today. I'll be out at least through the first part of tomorrow, at least into the afternoon, getting home sometime. If nothing else, I'll try to get an update out to you in the evening if I don't get home before the market closes. All right, so those are your levels right there. And it's kind of, choppy, grindy, sideways. Go to the 60-minute chart. You can see it here as well. Remember, this was the... these were, target, that was a sell signal there. This was a good uptrend line support that was hit the other day, bounce. So now this is if I thought this was an important trend line a few days ago, last week, the fact that we had such an impulsive reversal reaction off it, it further validates that trend line, gives it an additional check mark, because now, before it was kind of a maybe trend line because I only had a couple distinct reaction points here. Now I have a third confirming reaction. I'm not talking about each and every candle. I'm talking about those clusters of reactions on there. So it is the level to watch. And I'll tell you what, if I haven't done so already, I'm going to put a sell signal, price alert on it. And if that breaks, that should usher in the next wave of selling. And then I'd probably focus back out on the 60-minute or daily charts there. There's that. Let me tweak it here. That's the same uptrend line right there on the daily. So those are your levels. That's your update on the index. Other than the small caps, which put in this is a 60-minute chart. We had a divergent high there. I think my annotations went up to the top. They're probably, yep, there it is. I lost up there. So divergent high there. Rallied up, put another wedge in, another divergent high, sell signal there, breakdown. And we had, trading has been sloppy lately. The markets have been pretty sloppy. There was a pretty well-defined trend line. We had a brief spike above it, but it failed. So that was a failed breakout. And that was also off that divergent low. And remember, at the time, that was a target, and I highlighted we'd probably bounce. You could reverse, game of bounce off 202 because it was a pretty good support level / price target I had. And now we had the bounce. That little 60-minute divergence played out for a decent rally, but nothing big. But again, this is more indicative of bear trend action, where you have a nice positive divergence on the 60-minute chart, not far from the previous highs, but it fails to make new highs. Now, we haven't yet taken it out completely. What I mean by that, I'll show you. You still have potential divergence. So again, this is what we want to watch for. Ideally, again, for the bull case, you want to see this divergent hold, an equal or slightly lower high followed by a reversal, and you're going to have even bigger divergence. That could take the small caps to new highs. So I wouldn't get married to a short position. So if you're bullish, you buy it here. You're at support, that 202-ish support I mentioned before. You could have bought it the other day. You could buy it again. We're still there. You've got bullish positive divergences. Next support, especially if the divergence holds, about 199.64, we'll call that 200, even better support in my opinion. And so I'm showing you, how to trade if you're bullish on this market, go long there. But if you're bearish, you want to see this level break. You want to see a thrust down to that 199.64-ish level, call it 200 if you want, round number, around 200. You got a gap right there. Certainly, let me just add a second line there, kind of give you what I call a support zone, and when two levels are in close proximity. So bulls want to see if that gets hit, would be an objective long entry with a stop somewhat below, and bears want to see that level get taken out and see those divergences get taken out. Okay, so somebody asked in the update I got out to this morning when GDX broke that support level. That was the previous chart there. Well, bearish falling wedge breakdown right there. Sell signal 1, sell signal 2 on a break of S1, meaning for support. Those are your targets. Every arrow breaks denote where a reaction is likely. And then solid arrows always denote my primary or preferred scenario, with the dotted arrows being my alternative scenario. So that was then, that was on May 22nd. This is now. There was the initial wedge break. Then you broke R1, or was support at the time, S1, rallied back. Support once broken then becomes resistance, which I believe I changed in a video. So if you missed it, you hit T1, you could have gamed the bounce, you could have reshorted or added back in. Or if you missed the whole thing, shorted it the bounce back to R1. And then, so now today, T1 was this 3450-ish level, and that was broken this morning. So, there's that should open the door to T2. And should we get a little snapback rally, which is certainly possible. That's why I'm doing this video. I'm going to show you that right now. And I'm going to add a trend line. I can see right there, I should have a trend line, a different trend line. So let me give an update. Before I do that, remember, check the comments sections. Somebody asked, is it safe to assume that gold and silver also follow similar pattern? My reply, yes. Actually, and more so, GDX is going to follow gold and silver, not the other way around. Gold and silver are the dog, and the tail. Well, it's not the tail wagging the dog. It's these are the dogs. That's the tail. And GDX will follow. So I said I forgot to include the precious metals and miners in yesterday's video, but here's an update on gold. I posted this yesterday under that Nat Gas post, and boom, boom, boom. So this is what I'm watching. So I'm driving 1 foot on the gas, 1 on the brake. I actually covered my SI. Those are silver miner. That's silver. I'm sorry, silver future short today, because we're at support on both gold and silver in the futures, which I'm going to get to in a second. So that was yesterday right there. And again, my comments were pretty clear that, we just put in a divergent low after reversing just shy of T3. So that could be the catalyst for a decent rally in the coming days and weeks. However, based on the much larger scope of negative divergences that precede it, I suspect that gold and the miners will probably make at least one more decent leg down before it goes on to new highs. But again, the 60-minute divergence should be noted. So that's what I got out today, and I noted it. To not recognize it or respect it, would be just be wrong. Be remiss. Now, again, what I mean by note it, respect it, it's not a buy signal. Divergence is not. I always say that always over and over and over. Negative divergence is not a sell signal. It's an indication. It's a condition. Just like when you get sick, doesn't mean you're going to die right away. It could be something fatal, but it's not. It's a condition, and this is a condition that often leads to a trend reversal. But a lot of sometimes, not a lot, but quite often you see divergence that just gets taken out. So T3 has been hit. So that went on to hit right there. You can cover. We're probably going to bounce. There's positive divergence. It could be a significant bounce. So that's the reason for, I think it's a tradable bounce. And then if we take that out, that's gold. Again, this is gold. And so I was trying to impress upon the point that GDX, took out that support, but that's why I give you that potential bounce scenario. I'm going to get to that in a second. Gold, close enough. Remember, my price targets are support levels that a reaction is likely, and I always personally, and I suggest covering. If you are short, you want to cover below the actual support, just above, the actual support level, in case the buyer stepped in early. Likewise, if you're long on a trade, and I have a target that's, let's say 211.46 right here is resistance. You don't want to have your sell limit order at 211.46 because that's all eyes are going to see it. And sellers might step in early, so you want to typically take profits a little shy. Or what I'll do sometimes too is when you get close enough, if you think there might be a decent chance you're going to punch through it, tighten up, raise your stop. And again, I'm talking on a long. So on a short, you would lower your stop and give it the potential if it wants to go down through there. But let me show you what's going on the futures here. And then I'll get to the minors and we'll wrap this up. So other than that positive divergence there, let me get to the minors first, then we'll go to the futures. GDX, so that's it. Maybe, if you look at this, there's T1 was right here. I added this line. That's not T1, this was T1. So I'm going to color that up just so I don't get confused. That's the one I gave you this morning. I said it was around 36. I just drew it in as a unmarked horizontal line. I'll make it yellow. And I'll make it a round number. Everybody loves those round numbers, 35 even. It's decent support. So if we happen to kick back to it, but this was T1 down here. And then you can see T2, T3. Now, you see this, that impulsive move, and there's a couple little candles there. That's indicative of a bear flag continuation pattern, but you'd have to go down to a shorter term time frame, maybe a 5-minute chart. And so a bear flag continuation pattern, as the name implies, it's a continuation pattern, continues a current trend. Now you might say, well, Randy, the miners, this is a little correction so far. They're in an uptrend. Yeah, they're in a larger uptrend. So I wouldn't look for a bear flag continuation pattern on the daily or the weekly chart. But near term, they're in a near-term downtrend. They've been peaked here, and they've been making lower lows and lower highs, which is by definition a downtrend, just like this was an uptrend, higher highs and higher lows. And so therefore, a bear flag continuation pattern might show on these short-term 5, 15-minute time frames. And so it consists, again, there's a 5, there's a 15-minute, consists of 3 components. And I encourage you to look this one up because I trade these a lot, and they don't always play out, but quite often they do. So you have an impulsive move down. That's number one. You have to have an impulsive move down like that, and that's called the flagpole, followed by a period of consolidation that takes an upward form, either in a like a flag like this, or sometimes you get what is called a bearish pennant. They're almost the same thing. Pennant's just shaped like a triangle. Flag is upward shaped flag. And then the third component, you need to see a break. Oh, and you want to see that on volume. A lot of folks don't confirm their technical bullish and bearish chart patterns with volume. A lot of them have volume criteria you want to see. One of those is high volume on the impulsive leg down, followed by declining volume on the drift up, the flag formation, and then followed by a break below the flag, ideally on expanding volume. And then if so, the measured target for a bear flag continuation pattern is simply you take your trend line drawing tool, mark the high point. There was a gap down, but that would be the start of it, to the lowest point of the flag, and then add that to the highest point before it breaks down. Now, we won't know if and when it breaks down where that point's going to be, because this flag could form a little longer. And you don't want to see it get too long. It's anywhere from here to here. And so then you would add that to the highest point, and that would give your measured target there. That's about 32, again, depending on where it breaks down, right about 32.83 I have. And here we have the next target's at 33. So that would actually take you down closer to this T3 right there. All right, so now let me show you why we may bounce first. Or who knows, maybe this whole correction's over. There's been a hot bid for gold metals and miners lately. Remember, they broke out, it was a powerful breakout to new highs in gold. All right, let me show you the futures. We'll wrap it up. First and foremost, there's gold, and gold, everything else. That's silver will follow. I call it gold is a big brother of silver. So silver will follow, and there's some great trades on silver to be made when you see underperformance on the downside. When gold breaks out and it's rallying, silver's lagging behind. Wait for that setup, that bullish setup, and breakout in silver, and then you get a lot more bang for your buck as it plays a game of catch up. Even in a bull trend, when they're moving together, silver goes up more in percentage terms on a rally, tends to drop more, just like the miners go up more when gold's going up, in percentage terms. Gold will go up 10%, miners will go up 20 or 30. Likewise, on a downtrend, get more bang for your buck there. So I tend to trade both futures and the miners. And this one is gold. This is the 120-minute chart. I've shared this with you in the past, but we're at nice uptrend line support now. And so remember, the whole reason to be short, this was a big divergent high right there, right? Negative divergence. You had roughly equal highs in the indicator, well, actually lower on the PPO, and equal to higher highs in the prices. So that was your divergent high. That was a heads up, correction's coming. Then you went on and broke this uptrend line right there. There was a sell signal there. It was a marginal new high. Went down. So, but what I'm watching right now is this. So we know gold's in a larger uptrend, and you have a downtrend line right here. I believe I shared this last week. Positive divergence. And you can see what I've done. I've drawn out, if we go a little lower, if they break this trend line, there's pretty decent support here, about 23.10 on gold, GC, gold futures. So, however, we're at trend line support right now. So number one, there's one trade and one trade only right now, in my opinion, on gold. And because gold's at support, is either go long or cover a short. Now, if you want to, add to a short or reshort, if you want to wait for a break of the trend line, then you're probably going to go down here to 23.10. If you do, you're still going to have that positive divergence. So you've got to be a little careful right now on the short side. This positive divergence could certainly play out for a decent counter trend rally, could even play out for a move to new highs in gold. But that I can tell you definitively. This is not wishy-washy analysis. This is my take. They got positive divergence. You're at support right now on gold, and you are also at support on silver. So you can see on silver, this is not the best horizontal support, but it is support. It's a line I have at 29, about 29.50 right there. You had this top of this trading range right here. Then you had a breakout, a successful backtest. So that's what makes that horizontal support. However, so yes, so you're at support. I'm going to add another trend line right now, a little downtrend line there. You're at support number one, and with positive divergences. Same reason we were, shorting here, because of the negative divergences. That was a divergent high right there. Divergence forming. Just like you had a divergent high there and a correction after that. Just like you had a divergent low there, right? And a rally after that. This is swing trading, guys. And I know it doesn't always play out. Not all these setups play out. But you take enough of these and spread it around. It's been a little more quiet to those folks that only talk about the index trades. If you want to look, I don't know. Everyone has different trading styles. Everyone trades different things. There may be people out there that only trade ES, the S&P futures, or SPY all day and make a successful living at it. I like to spread my bets. It's just nature of the game. It comes from my financial advisor background, diversification and asset allocation. I learned long ago. It's just like in your 401k or your investment portfolio. Couple months you're going to be sucking wind on your tech stocks if you're just always long and bullish, but then your commodities are going up, or your treasury bonds are going up, or your retail sector ETF or whatever it is you're trading at that time. And so it's the same way with swing trading as well. Spread your bets. Don't force trades, and just sit there and take your shots when you see. So I just want to point out again, we're coming off a divergent high, but you're also in a larger uptrend. You're at support in silver with positive divergence, and more importantly, again, gold at support. So if gold wasn't at support, I might sit tight. And I am sitting tight. I still have some minor shorts I'm going to get to. I just wanted to cover my silver futures, both as a factor. I'm leaving town today. I could have put stops in place and let it run. I just decided to lighten up. That's all I'm doing right now. Okay, silver. We also silver miners. SIL are the silver. That's one of the big silver miner ETFs. One I usually will chart and go over the components. So there it is. So on one hand, you had. Let me just clean this divergence line up. That's must have been drawn originally on another time frame. That's negative divergence right there. Reason to be short the miners. I did an extensive video highlighting first and foremost the silver miners. I trade the gold miners too, but I love the silver miners. When you get the call right, they tend to have a little more bang for their buck. And the reason is, like I said, silver tends to move up and down more than gold. That was just a beautiful, clean. It doesn't get any better than that in trading to me. That's just a well-defined uptrend line, clear negative divergence, so clear a blind man could see it. Solid breakdown. And look, we're at support right now. Pretty good support too. That's my first target right there, 33. I'm going to put a line in case we bounce now. That's resistance right here, about 34. So if we do bounce, which I put decent odds, I'll tell you it's close to coin toss odds. Normally I'd put higher odds. Might be, let's say 51% we're going to bounce, 49 we don't. They have a decent bounce. That'd be a 4% bounce if so, a little better than 4% off closer to, yeah, it's really 5%, back to 34. So if you're looking to reshort for another leg down, and there's also a trend line there. So it doesn't get any better than that, guys. Here it is. So if you get it, you may not get it. And if you're bullish, what you want to see is 34 get taken out, and then that trend line then will probably go to new highs, and that's all you're going to get. However, based on the scope of the divergences, just like the reply I just read back to you from yesterday, when someone asked, based on the larger divergences, I favor more downside, whether we get a tradable bounce or not. So what I've given you is a pretty detailed potential trading plan. Now you trade it the way you want. If you're bullish, buy here, buy support. We'll cover your shorts if you're happy for the quick whatever it was. The miners have dropped 10, 11% so far. And again, trade it however you want. So you could see on the 60-minute chart, I had that line right where we were. I'm going to put it here because that's where it should be on the dailies. It's more of a support zone with the next support. If that level breaks, which again, I think, and that's where I'm leaning towards, despite, I don't want to, sometimes people get tripped up on my words, but listen very carefully. Very near term, my confidence isn't so high. I could see the potential for a bounce, but thing about it, and why we could just slice on through these support levels and go to the next targets, is that the metals and miners have been a very hot trade. Think NVIDIA. It's just it's one-sided bullish, and I don't know if there's sentiment polls on gold. I'm sure there are somewhere, maybe on gold bug sites. It's just turning the TV on and reading news feeds and all that. Everybody, just like NVIDIA, everyone foam at the mouth bullish. And when that happens and everybody's bullish, what happens is everyone, he or she, has bought his or her last share. There's no buyers left. And then you get these corrections. And in the nature of the metals, believe me, we were long off this divergent low. This is where we went long silver miners. I give you these targets. We nailed the bottom to the penny almost. And then you had a breakout. And my point to that is just say, this is the nature of these. They don't let you in. So that's why I'll often position early in advance of breakouts when I see turns coming, especially in things like this, natural gas. Just once they turn, that's it. And most don't want to buy there. I'm very contrarian. Nobody wants to short when I want to short. I'm speaking metaphorically, generically. And nobody wants to buy when I want to buy. And sometimes you get cut trying to catch tops and bottoms. But when, if you manage your stops appropriate, the payoffs are tremendous. And so where I'm going with that is when no one wants to buy, and then they all want to start buying here. And look, guys, I've done this a long time, this site. And so I've talked to people, they start asking about it here and here, late, in the game. I'm like, yeah, it's an uptrend now, but I just can't, I'm not comfortable chasing a rally, after something's turned and gone up, 40%. At that point, if I miss the run, which sometimes I do, I'll just wait for the next objective trade, long or short, being either long, pull back to support, or the end of that trend. And what you can see here, and it's clear to me, clear as day. I'm going to duplicate. Oh, you know what? I probably already have it up here. No. Well, that's a divergent high. Again, this is stuff I've already covered. I did the video back a few weeks ago. There was your clear sell. A very, very well-defined cleanup trend line. Again, highlighted back in anticipation before the breakout. There's the breakdown. And now we're at that, again, first support target. But based on the scope of this divergence, even that little divergent high there was a little smaller, but you still got that. Now we were in a larger downtrend. But either way, this is silver. And it's just, I don't know, man. This stuff trades so well to the technicals, these miners. This was a divergent low. And if you go back, most, if not all, these were highlighted as long and short opportunities. Divergent high rally. Divergent low rally. Divergent high drop. Divergent low right there, rally. There was no divergent high, but a clean, very clean uptrend line, which broke there, sent it down, divergent low, rally. Actually, that divergence is still there. That was another divergent low right there. And you can see, so I'm extending out these lines. So what happened is you had initial rally, and it made even a larger, bigger divergent low right there. And then, boom, rally, divergent high, drop, divergent low, big rally there. Okay, so that's it, guys. So we could come down to right here. Now let me go over the individual miners. First start with the silver, and I'll rifle through the gold. So again, these were all covered in a video recently. There was your sell signal, WPM, one of my favorites. It was one of my favorites. It was listed as my favorite, and I did a video right here off the lows. We bought it there, hit our first 5 targets in a row, just hit without it didn't let you in. This is that example I'm talking about. We just blasted on through T1, T2, 3T, all the way up to T5, and you know, in a matter of just what is that? I have to move it from right here, from our entry point. I think it was either the low right there, the day of, or right around that low. So in just T5 was right here. Literally, what is that? 15 days, 15, yeah, 2 weeks. We, you know, this stock rallied up 16, 17% right there to that target. And then it pulled back and it hit T3, pulled back to, you know, resistance. Once broken, becomes support, and then the next leg up. But as I, you know, covered in the video the other day, we've come full circle. This was a divergent high, as that was, and as that was, and as that was. You see what happened in those divergent highs, and you see what's happening now. However, we just hit, again, these would have been covered in the video a couple weeks back. 52.59 was my second target. There was a first target, 54.37. We, you know, hovered just above it. Remember, cover a little shy if you're targeting it. But here's the thing. We're just fresh off the breakdown and back test, and this is just the initial leg down. Corrective waves are usually at least an ABC, you know, if it's a corrective wave and we're going on to new highs. And so I still favor this target here. And if things get ugly, we could go a little deeper based on the scope of the divergences. Wouldn't surprise me. But as of now, like I said, you know, bounce or no bounce, we're probably heading down to 51 here in WPM. But the bounce could be significant. And where to? If we do bounce, we're to short or cover short. There's a downtrend line off the highs right there I just drew. So, you know, that would be ideally for the bearish scenario not to exceed that on a bounce. If you do, maybe the correction's over. Maybe we're going to new highs. Hard to say, but the probabilities certainly go up, that I can say. PAAS, Pan American Silver, breakdown. I got a sell signal, price alert on it yesterday. Hit the first target today. We're down through it. And see, again, the point I'm trying to impress is why we're at a support on a lot of these, or, you know, this one not necessarily, but others. But based on this big divergence, remember, they don't let you in. If you sit there and mull it over and you don't take the buy signals when you had them, there was a nice trend line there. Look at that little wedge break. Remember, we were long back here. I covered it in the video. This was one of them. It was, you know, would have covered different boards, different, you know, different boards mean different trend lines on different areas. There, well, that one's not showing it here, but again, it was covered back here, and there is the breakout. And so it just didn't let the shorts out. You know there's a lot of shorts when a stock makes a 52-week low, and you know there's not a lot of bulls in there, but boom. And so that's what we could get. And my next target, we've already taken out 2073. We're still below it, so that opens the door to 1938. And then these two, these would be, again, if things get ugly, my max targets, 1812, 1726 right there. And that's a nice one because, see, this was a whole basing pattern there and big resistance. So that's a maximum target right now. Let's just, you know, see if we get down here to 1812-ish. That's another 11% drop if this correction in the minors continues, which I'm leaning towards. There's my AG breakdown. Like I said, that one didn't have a divergent high, but when I did the video, I told you the vast majority did. They were overbought with negative divergence, so you're not going to get on every single one when you have the vast majority of components in a sector, you know, all singing the same song, you know, all bullish or bearish charts, you know, vast majority, you know, 60, 70, 80, 90%, which is probably what we had in the minors. That's enough, so you don't have to have that divergent high. FSM at support right now. Look at that one, testing trendline support. If you miss this, you want to get in, you want to short the metals or you're the miners, or you're already long the miners and you're like, darn, this one. That's a big bearish rising wedge. The measured target on this wedge, take the widest part of a wedge, which is right here to here. This is how I do it. And you add that to where it breaks down. That gives your measured target right there. And there is some minor support there. So I'll add a level. We'll just call that my first target at about 528. But this one I think is where it's going, about 493 right there. And that's going to be another, it's already rolled off the top, another 16% if that target's hit. You know, one had divergence there as well. That last high right there, it had positive divergence at the low. See, these guys, I'm telling you, man, just trades so damn well to the technicals. It's almost like printing money when you just wait patiently. And admittedly for me, I got out. I didn't milk the entire run. I milked the big profits off the initial run out of here, and then that's it. So you get in this, you just wait for the next objective setup, and right now that's like I said, looking at the downside, looking like more, and quite a bit. If you started shorting them a few weeks ago when I highlighted them, and I told you at the time I was already taking positions in advance because my confidence was that high based on the charts that they would go on to break down. Mag, boom, rallied right into that 1436 resistance. EXK hasn't yet broken down. That's still above trend line, but rolling off that divergent high. SVM at support. So this is a common theme, and this is why I wanted to do the video. As I'm going through this, I have a lot of these stocks and the ETFs, so the gold or silver miners at support. So although the charts indicate to me that more downside is likely, we may have a bounce first. And then again, I've learned the nature of these guys. They don't always, once the trend changes, they don't always react or have reactions off those initial price targets or support resistance levels. So I'm just rifling through the list. And there's silver, the sector itself. And then you can look at GDX components for you guys trading the gold miners. I covered these two recently. Newmont, the biggest of the gold mining stocks, at my 24 target I gave you, and that was back here. So this one's already dropped 9%. It's a good support. If it breaks that support, then it has a gap that might want to be backfilled here down to about 38.73. AEM also hit my first price target. Again, this was covered in the video recently, and that's at 65.07. The low of the day was 65.11. 4 cents on a $65 security. I'd say that's close enough for government work. So again, point is we're hitting, a lot of these just hit support. So if anything, even despite the first post I got out to with silver breaking support, that's why I do this video, I'm looking at it, and then I got that out to you when I saw it. And then a lot of these are, most of them are fresh breaking down off breakdowns, but then you got others that are either haven't broken down, they're at trendline support, or they're at price support. So I know I'm being a bit redundant and repetitive, but I know a lot of people are in this trade. And the thing is, it's like natural gas. These guys move fast. You got to be Johnny on the spot when you're trading these, if you're active trading. Now, again, I'm speaking to the swing and trend trader too. I'm telling you where I think they're going to go. If you're willing to ride out counter trend rallies, this one, for example, WPM, wheat, precious metals, may bounce back. I already covered it with the silver miners. To the 54.37 or possibly the trend line before going down to 51. There are no guarantees that it does that, but those would be your objective short entries or add-ons or re-entries there. Or you wait for today's lows to get taken out. That's the other thing, guys. Like I said, we may not bounce. So then when do you, again, I've been short these. I don't like missing a turn. Like, we're in no man's land now. If we're halfway between the tops, the breakdown points right there, and my preferred swing targets, when you're in the middle, in no man's land. So at most you can either short, if you took profits, short rallies back into resistance for the next leg down, or wait for today's lows. Wait for those that hit support today and are either at support now or have bounced a little bit. Wait for today's lows to get taken out. Then those support levels get taken out, and then you may get that quick swoon down. So that's it. I can't be any more detailed or specific. And again, I'm not going to be around for most of today and most of tomorrow. So I just wanted to get this video out to you. And it's getting long. It's already at 43 minutes. So we'll wrap it up here. Remember, as always, you can hit the settings button on any of the videos, any YouTube video for that matter. I like to play them back at 1.5 or 1.75 speed, but I'm talking faster in this video. However you want to do it. I just want to mention that you can whip through a 40-minute video in almost half the time by increasing the playback speed. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.